So, as Michelle said, my name is Kevin Stapleton, and for those of you who I haven't met, I'm an economist in the Labor Market Information Division at the Vermont Department of Labor. Matt Berowitz is the head of that department. Some of you, how many people have seen the famous pictures, there might be a video of it, when Babe Ruth stood up to the plate and hit that and pointed to the left field wall and hit the home run? Raise your hand if that sounds familiar. Anybody remember who bat after Babe Ruth? That's what it's like when I have to fill in for Matt. As a quick introduction to what we're going to do today, I'm going to talk most of the conversation about manufacturing in Vermont and changes in manufacturing and how manufacturing employment has changed over time and how we expect it to continue to change over time. But before we do that, I wanted to quickly address, can everybody hear okay? Is that, quickly address a quick question that people had. Before, at the end of last meeting, someone asked us to do a little bit of research into why people who are working part-time, who would rather work full-time, why are they working part-time? It could be, if you think about the various reasons why someone who would prefer to work full-time is working part-time, it could be because they have family obligations, it could be because they can't find full-time employment. Somebody asked us to look at that by gender. So we did a little bit of research into that, and I'll show you the results of that in a minute, but before we get too far, most of today's conversation is going to be related to data we collect that is business data. It comes from a program called the Quarterly Census of Employment and Wages. If you are an HR person, you might know this as a C-101 form that you have to fill out. But the data where we talk about part-time, full-time work actually comes from a program called the Local Area Unemployment Statistics. If you ever hear someone say that the unemployment rate in Burlington is 3.7%, that comes from the Local Area Unemployment Statistics. That is data that is collected from households. And when we survey households, the Census Bureau surveys about 60,000 households nationwide every month and asks a long series of questions. And one of the questions they ask is, are you working part-time? And if the answer is yes, I am working part-time, a follow-up question is, why are you working part-time? Are you doing it because that's your choice, or are you doing that because your economic situation does not allow you to work full-time? As we talked about at the last meeting, Vermont has a larger share of employment that is part-time, but a smaller share of employment that is part-time because they can't find full-time employment than the rest of the country, which is to say that we have a larger part-time workforce that is working part-time by choice. Might have something to do with our industry mix and our occupation mix, might have something to do with the lifestyle in Vermont. We don't really know, but when we look at it by gender, if we're looking at people who work part-time but would prefer to work full-time, the blue bars are male and the reds are female. Most people who are working part-time but would prefer to work full-time are doing so, and this is across both genders, and is not probably too much of a surprise, are working part-time for economic reasons because they can't find full-time work. But once you get beyond them, you can see for reference that the ends on these are pretty small. The samples are relatively small, but this fits a pattern that I think most people would fit with their understanding of the world. A larger portion of women work part-time for family or personal obligations. A larger portion of, if you look at it as a portion, a larger portion of males, because these are sheer numbers and the N is smaller on the males, as a portion, more men are working part-time for schooling and training reasons, although those are fairly equal. But the breakdown is not as different as perhaps the general public might perceive. The largest bulk of people are working part-time. Who are working part-time, who would prefer to work full-time, are doing so because they can't find that full-time employment. Anyway, now that we've answered that question, we're going to talk today about manufacturing. And first of all, let's establish what manufacturing is. In our world, manufacturing is taking inputs physical inputs and transforming them into an output. That is, by economic definitions, manufacturing. Using inputs that get transformed, physically transformed, into something else as an output. So one thing that has changed in recent years is that even though we have less manufacturing, we'll talk about that in a minute, we have a lot of jobs now that what that person is doing probably would have been considered a manufacturing job 30 years ago, but computers have moved it from building a billboard to placing an online ad. An online ad is, and anything that is done online, any website development or anything like that, is still considered by BLS, Bureau of Labor Statistics definitions, a service. If you build a website, you are providing a service. If you build a car, you are manufacturing something. And we can have a long discussion about whether perhaps certain types of web-based work need to move into manufacturing, but as it stands now, it's not. So part of what has changed over the years, when we talk about a decline, if there is such a thing, a decline in manufacturing, is in part a change in how we interact with the world and what types of products we purchase. Because we purchase less manufactured products and more products, informational products that are coming from computers, coming from online. So that has changed the world in which we live. But more importantly, when you think about manufacturing, when I go into this, your first reaction when we look at how much manufacturing has declined, I think most people's first reaction is that this is a problem. And I don't know, well, as a representative of the state, as an economist, I don't know if it going down or up is a good thing or a bad thing. What I do know is that in 1900, or well, in 1880, 55% of the workforce in the United States was in agriculture. And today, 2% of the workforce in the United States is in agriculture.
Production agriculture.
What's that?
Production agriculture.
Production agriculture, yes, yeah. Yes. So, but we produce a lot more food than we did at that time. Per capita, we produce a lot more food than we did then. And what has happened is that productivity has increased dramatically in food production. And this is not a story that anybody here is surprised by, but we have become so good at producing food that we can do it with 2% of the workforce instead of 55% of the workforce. And part of what has happened in manufacturing, there are two factors. One is that we, in the United States, have gotten very, very good at making things, especially in the post-World War II era, when manufacturing became the route from poverty and low income to the middle class. We brought millions of people out of poverty by giving them jobs in manufacturing. And that has created a sense in the United States that manufacturing is in large part what drives the economy. I don't know, we could discuss whether or not how true that statement is, but in 1880 we would have said that agriculture drives the economy. And we were able to grow our economy and become a much more prosperous nation, even though we had a decline in the number of people working in agriculture. And it's entirely possible that the same thing can happen in manufacturing as well. We are getting more skilled at manufacturing. The problem is that in the post-war era, that is what created what we now think of as the middle class, because these were jobs that people with a high school diploma could walk into and have a career. You could walk into a manufacturing plant in Vermont or in the Midwest or somewhere at 22 years old with a high school diploma in hand and get a job and spend 40 years there or 50 years there and retire and live a middle class lifestyle. And that has changed. We don't have quite as much manufacturing as we did then. A lot of manufacturing, because we're competing for wages, has moved to other places. And those middle class jobs now tend to have higher education requirements. So having set the stage with all that, when we talk about, now this is a wall of data on purpose, I don't expect you to read this, but the point of this is that the reason why those manufacturing jobs the reason why we think of manufacturing as providing those jobs is because about half of all jobs in manufacturing are in production. And these are production employment that people with relatively low levels of education and a basic skill set can do. So as we lose manufacturing jobs, the fear is that we lose these positions for people who just stop at high school or get a little bit of education after high school. As the workforce becomes more specialized, we need a more specialized workforce. So this is in data form why at least economists think that manufacturing jobs have some importance. It's because in furniture-related product manufacturing, for instance, which Vermont has a lot of, 64% of the jobs are production jobs. And those are those jobs that tend to be jobs that don't require a whole lot of skills or education, a lot of hard work perhaps. When we look at manufacturing, let me stop real quick and say that at any point, please feel free to interrupt me. If you have a question, if I say something you want to discuss, please cut me off at any time. I'll stop. I'll talk until someone tells me to stop talking. When we think about manufacturing in the state of Vermont, you can see this is starting in 2001 all the way to 2012. Share of gross domestic product statewide. If that means nothing to you, then that's okay, because you can also look at it as a share of employment. And you can see that of all employment in Vermont, about 15% of it was in manufacturing in 2001, and by 2012, that number declined to about 11% of the workforce working in manufacturing. And not surprisingly, if you understand gross domestic product, as employment fell, gross domestic product fell, because gross domestic product is a measure of how much stuff is produced, right? So as we produce less stuff, we hire less people to produce stuff. That's, those two tend to go hand in hand. So this is that decline in manufacturing that has been a conversation in the United States for really the better part of 20 years now. Manufacturing in the United States in terms of employment peaked in the late 80s, early 90s, and has been slowly, although in the recent decade more quickly, we've been shedding employment in manufacturing. So the troubling fact, if we place value in manufacturing jobs, then the troubling fact might be that it is declining in Vermont. But what might give you a little pause is that even though it's declining in Vermont, it is still a larger portion of our jobs than it is nationwide. About 9%, if you can read that, about 9% of jobs nationwide. Yes?
Can you go back to the last? What surprises me about this is that the largest portion of the decline happened before the economic downturn. And since the economic downturn, it's been fairly stable.
It is.
And that surprises me.
In fact, it has gone, if I could stretch this out, I couldn't get the state GDP numbers, so I left out, but if I could go to 13, 14, and, well, 13 and 14, you would see that it actually comes back up a little bit.
For both GDP and for percent of employment?
Yeah, for both. Well, I don't know, because we don't have the newest GDP numbers, but it's hard for employment to go up without GDP going up, because you hire people to make stuff, right? So, but it has, the decline has been tempered, and in most places in the United States, it has started to climb up a little bit. You will hear this referred to by policymakers, but not economists very often, as a manufacturing renaissance. A renaissance, to me, implies a little bit more than, keeping the line from falling. But that's why I'm an economist and not a policymaker. But it has stabilized, I think we can safely say, in recent years. And there are a number of reasons for that that we can talk about offline. But the share, yeah.
One thing that the numbers and the buckets that the NAICS codes for manufacturing are in, it does not often reflect the fact that many times a company will start out not with a manufacturing MAGS code, and they sort of stick with that original code. They don't ever, and that was not their primary MAGS code to begin with, and they suddenly move into manufacturing. We see that a lot in Vermont. They suddenly become a manufacturer. The other thing that this really doesn't show, as I'm trying to sit here and take in the data here, is the fact that the whole face of manufacturing has changed so dramatically, where we have ecosystems now of manufacturing, where pieces of the manufacturing value chain are very external. They could be over in Europe. They could be data in being research R&D labs. It could be data, digital information being sent real time, literally to our factory floor, with data being exchanged up and down the value chain. So is what's happening over in that distant place considered non-manufacturing? Probably it's under a different code, but it's all tied into the manufacturing ecosystem, if you will.
Absolutely.
Largely, this is being driven by the internet and all that's been happening, the digital world in which we're living. So literally, there has been a sea change, which I don't think our data has caught up with yet. And what's happening, it's going to become even more dramatic, which to me says that we've got to get our heads around a different way of looking at manufacturing and the way its whole face has changed. These manufacturers, look at Tesla, you know, they now can connect the cars directly back up to the manufacturing plant. So they've gone deeper down to the consumer level, where they're providing services to the consumer, cutting out the middle people. And this is the whole wave of what's happening in the future of manufacturing. So at some point, we've got to keep that in mind as we look at raw data like this. It may not really reflect the accelerated change that's happening in manufacturing.
I want to acknowledge Bob Zeider. Bob is with the Vermont Manufacturing Extension Center, VMAC, and we were lucky to get him today because there was a major conflict, but we're glad that you're here. And if everybody who speaks could say your name and your affiliation, that would be great.
Sure, quick. You must be Bob.
Yes.
So, I thought it would be a random combination. So, just real quick, first of all, I really appreciate that observation. And second of all, I'd really like to sit down with you and talk about that, because that is what we are trying to get our brains around. But we know economics, we don't know the manufacturing piece as well. And we would love to have that conversation, because it's really, a lot of this, I think, is definitional changes. And we can't wait around for the Bureau of Labor Statistics to catch up, or NAICS coding to catch up, because they're still trying to catch up to 2000, right? So, yeah, but I appreciate that.
One more question.
Yeah, real quick, it actually might be for Bob. Just in terms of what's going on with the Feds easing the interest rates and so forth, and then the dollar, of course, being lower, that has also had an impact on manufacturing. And with what now the Central European Bank is doing and so forth, it'd be interesting to see how that affects manufacturing, not just in Vermont, but across the United States, because the dollar will be rising, especially if they go to the corrective reaction that they from what I see, is going to take place either in December or early next year.
Well, it seems to be impacting exports. There's no question there right now. The high value of the dollar is a negative force in terms of export.
Just be interested to see that when we see the next few years on it.
Yeah, you just got to be careful, because waiting around for the high value of the dollar to be maintained is, people have lost a lot of money waiting for the high value of the dollar to be maintained. So, so when we look at, as I was saying, when we look at when we look at the share of manufacturing relative to all other employment nationwide, Vermont actually looks pretty good. We have a higher concentration of manufacturing. Again, if we put import in manufacturing jobs, then Vermont is actually doing quite well. Another way to look at this is a term that economists use called location quotients. And what this tells you is that this is the concentration of manufacturing employment in the United States. We just said a second ago that it was 9%, right? Anything above that means that we have a higher concentration of manufacturing. If you have a 1.2, it means that you have a 20% higher concentration of manufacturing than whatever the baseline was. And in this case, the baseline is the United States. And what you can see is that Vermont, the blue line here, not only do we currently have a higher concentration, but despite our recent years' decline in employment, we still have a far higher concentration of manufacturing than the nation does. And Chittenden County in particular, thanks probably in large part to a couple large manufacturers, has a much higher concentration of manufacturing than than the rest of the nation. And I think when people think of the Vermont economy, I don't know how many people think of us as manufacturers, but we are a larger manufacturing economy than almost any other state when you look at the concentration of manufacturing employment. And we will come back to that slide one more time at the end. This is breaking out the manufacturing employment by the subsectors. And if I was to ask you which subsector you think has the most manufacturing jobs in the state, you might say it would be, anybody?
Computers.
Computer, oh, look at that, computers. So, the second largest, however, is food manufacturing. Thank you, food manufacturing. And those two alone account for about 40% of all the manufacturing jobs in the state. And the interesting thing, we'll use the word interesting. The interesting thing is that computer product manufacturing has been going down, and food manufacturing has been going up, and going up somewhat dramatically, especially in the past 2 or 3 years. Unfortunately, our most recent data only captures a portion of that increase in food manufacturing, but we'll look at that in just a second. You can see, though, we do have a wide variety of different kinds of manufacturing in the state. We have furniture, we have chemical manufacturing, but the bulk of it is in these two categories of computer, food, and then machine manufacturing, fabricated metals, that type of stuff. If you take that same chart and make it into a pretty pie instead, it looks like this, and you can see that this is computers, this is food, and then machinery manufacturing. Nothing else, once you get beyond food and computers, is more than 10% of the employment in manufacturing in the state. And I know that there's a lot of data on that slide, on all these slides, but I'm happy to say that Jason has sent you a copy so that if by chance you actually were really interested in that slide, you can go back and review it. Another way that we sort of cut up manufacturing, we can look at by sector. We can also break it down into what we call durable goods and non-durable goods. And durable goods, for some reason, for reasons that actually I've never fully understood, the BLS decided in the 1970s that we should separate manufacturing into things that are going to last 3 years or longer and things that are not going to last 3 years. So the BLS is all, well, the Census Bureau and the BLS are also a little bit behind because, raise your hand if your cell phone is older than 3 years. 1, 2, yeah. But they still think cell phones are a 3-year product. Or at least the chips inside the cell phones, which probably could last 3 years. But anyway, so we break it into durable and non-durable goods. This is actually kind of helpful because food is clearly a non-durable good, and it helps us look at food specifically. If you look in Vermont, non-durable employment has fallen from about 7,500 in 2001 down to about 4,500. We've seen this decline, but what is interesting to note is that this blue is food manufacturing, and I can't do it because we don't have finalized data yet, but if I could, you would see that food manufacturing, which in 2009 was right about 4,000, is up almost to 6,000 now. We have seen, you might even call it a renaissance in food manufacturing employment in Vermont. And this kind of fits, if you think, one thing that's included in food manufacturing employment is beverages. You can think of a couple companies that have been pretty successful at that, right? And high value add, to put it mildly. So we see this decline, but we see this increase in food manufacturing, which I think in some ways fits with the Vermont brand, right? It's like, when people think of Vermont, they might not think of manufacturing, but they think of food. And so, somebody up there? Yeah.
You're probably going to get to this. I just wondered if the wages paid on those two industry subsectors, how they relate. Does food manufacturing pay as much as durable goods?
The short answer, well, the answer is no. The slightly more complicated answer is that it is in part due to the mix of durable goods manufacturing we have in this state. We have a few very large employers who produce very high-value products and have high-tech and a lot of engineers, and that pulls up the wages in durable goods manufacturing. It's not that food production doesn't pay as well as durable goods production, it's that the durable goods production we have, it's not making cars, it's making very high-value stuff that needs very smart engineers to craft. Is that? Okay. We will come back to that just a little bit. We can look at the wages. There's not a whole lot in here about wages, but I'm happy to talk about that. This next slide looks at the declines, basically, in the two groups. And you can see in Vermont, between 2001 and 2012, by far the largest losses were in durable goods manufacturing. We have lost, and I don't need to tell anybody in this room, we can think of places that have had significant layoffs in the past, what in this case 11 years, while non-durable goods manufacturing has declined, but only by about 17%, whereas the durable goods manufacturing has fallen by about 30%. Yeah?
And Pat Moulton with the Agency of Commerce, but I think it's important to note productivity in manufacturing has not fallen by the same rate as employment. And I don't know if you've got any slides.
Productivity has fallen. Well, that's what this is measuring, GDP to employment.
Okay.
Right? So
But that
the,
shifts to...
I mean, productivity in manufacturing has not improved much.
The outlook per worker has significantly, it's
Yes,
up over
that's what I'm
10%
talking
during that
about.
period.
Right. The
In
productivity
that same
from...
period, it's up over 10%.
So
Productivity from manufacturing, output
Okay,
for workers.
We can talk about, we have conflicting data, and your data, I have no doubt that your data is correct, but this shows GDP per employee, basically, and this shows GDP per employee. If there was increased, if my slide was showing increased productivity, you would see employment go down and GDP not go down as much, but I would love to see the information you have, and this wasn't an attempt to show productivity, so.
Understood.
Yep. Where was I? There we go. So when we look at, we looked at that, we looked at this slide, and these declines. When we look at where the gains have been, we're going to break it down into where the gains have been and where the losses have been since 1993. So between 1993 and 2003, that's the blue sections here, we saw increases in beverage and tobacco, in food, we saw in miscellaneous manufacturing. But since then, we have seen a loss in some of these, for example, miscellaneous manufacturing, but you can see food manufacturing up through 2013 has added a lot. This is where the gains, these are the subsectors that have a net gain in employment since 1993 and where they have come from. That's a negative 46 and a positive 186. I didn't pick up on that. And then where you look at the losses, this will tell a story that I don't need to inform anyone of here. The losses have been primarily in computer and electronic product manufacturing, and then in some smaller categories as well. The interesting thing when I look at this chart, what I find kind of interesting is that some of these areas of losses have the pace at which we are losing them has increased in some industries, but slowed dramatically in others. So machinery manufacturing, even though we've lost jobs in the past decade, the rate at which we are losing jobs is much lower. These are the categories with the most losses. My first one was the category with the most gains, category with the most losses. Then there's another half dozen that fall in between here. Going back, as I said earlier, sometimes it can be depressing talking about manufacturing. I think in a lot of ways, as Americans, we think of America as a place that we make stuff, right? We're manufacturers. We build things. And despite the declines we have in Vermont, again, we are part of a much larger economy nationwide, and we have done very well relative to the rest of the nation in protecting manufacturing. You can see that the trend line since about 2003 is that we have increased our concentration of manufacturing relative to the rest of the country. And if we look into the future, we don't have any hard data on the future, but we have the best estimates of the future. And if we look into the future using what we call our industry projections, which is a regression model that tries to predict how much employment there will be in each industry at a certain time in the future, we expect over the next 10 years, well, at this point, the next 7 years, to see an increase in food manufacturing. And this is interesting because this was a 2012 prediction of how much employment we would add in food manufacturing by 2022. We predicted we would increase it by 600. We've already increased it by more than that. Food manufacturing is going up a lot faster than you would imagine, and most subsectors of manufacturing we expect to add jobs, with the exception of, and again, it's probably not a surprise to people, but computer and electronics product manufacturing, we still expect to see that declining. Part of that gets back to how we define manufacturing. Because when we build a chip, that is manufacturing. When you build a website, that is still considered a service. When we talk about a loss in manufacturing job, it's always important, I think, to keep in mind that even though we've lost manufacturing jobs, the total number of jobs in Vermont has increased during that period. And we are increasing employment. Some of those jobs are going, people who used to manufacture things are now providing a service that is building something called a website, right? So a lot of the jobs that have been added require a different skill set, but we are still adding jobs in this state. The growth has been perhaps slower sometimes than we would like, but we continue to increase employment in the state. One thing that I will quickly look at is looking at it across regions and how, where the manufacturing jobs are by region. And this is a story you've heard before. The Burlington area, the Burlington labor market area, which is basically Chittenden County, a tiny bit of Franklin, and a tiny bit of Addison, and minus Buell's-Gore. I don't know why the BLS takes the time to remove Buell's-Gore, but they do. But you'll see that, to the surprise of no one once again, about 14,000 jobs in manufacturing are in Chittenden County. As it turns out, about 45% of manufacturing jobs in the state are in the Burlington labor market area, like I said, basically the Chittenden County area. About 40% of all employment is here, and about 45% of all the manufacturing jobs.
That's really northwestern Vermont. When you say tiny bit, maybe tiny bit geographically, but it includes St. Albans City, St. Albans Town, and Swanton, right?
Yes, yeah.
That's where the population is.
That's an important, tiny was a poor choice of words on my part. So when you look at that by, remember location quotients, as we were talking earlier, if the statewide average in manufacturing is 1%, if the average concentration in the state is 1, then Chittenden, or the Burlington area, is a 1.14. That means that the concentration of manufacturing jobs in Burlington is 14% higher than the concentration statewide. And what this helps us see is that even though there's not a whole lot of it doesn't, like the last chart, you saw all these little tiny numbers for other areas, that's based in part because they have a much smaller labor pool. St. Johnsbury, St. Johnsbury, they have half again as many manufacturing jobs as a concentration of manufacturing jobs than the statewide average. Whereas some other areas, like the Barrie area, quarrying, by the way, is not considered manufacturing. So Barrie Montpelier area, they have about half the concentration of manufacturing that other areas of the state do. And then obviously you can see that for each area. If you look at statewide manufacturing, as I said earlier, about 45% of it is in Burlington, and the rest is distributed in single-digit numbers around the rest of the state. Somebody asked about wages. I'm going to touch on wages very briefly. I'm a little leery to touch on wages because I don't think this slide always tells the story that It doesn't properly tell the story. But if we look at, this is the statewide average wage in Vermont for all employment. The statewide average wage, annual average wage, is about $42,000. The statewide average wage in manufacturing industry is about $56,000. So we can see that wages are higher in manufacturing than in other industries statewide. Part of that is because Burlington and Chittenden County have higher wages, and we have a higher concentration of manufacturing jobs. We also have, it happens, that the manufacturing in Burlington, the Burlington LMA, labor market area, the manufacturing done here, there are some old sort of legacy companies with very high wages and very high skilled workforce there, so that pulls up the wages. Statewide manufacturing average wage is, like I said, about $56,000. Only Burlington and Rutland are higher than that. All of the other areas are lower than that, but that's, what I don't want people to walk away with is that people in Derby must be getting ripped off in their wages. It's because the distribution of industries that are in those areas is different. First of all, the wages are higher in Chittenden County. We know that overall, and it's more expensive to live here. We know that overall. But we also know that the mix of types of manufacturing are different in some of these smaller communities than in the Burlington area where we have some legacy. Yeah.
Hi, Joan Goldstein, Economic Development. It'd be interesting to see how many employers are made up of those, each individual bar, so that you could see how the competition for labor impacts wage rates.
Oh, like the number of firms in each one of them?
Exactly.
Firms in each one of them? Manufacturing firms in each one.
Yes.
Manufacturing.
And Kevin, to add on to what Joan just said, I'm wondering, and maybe this is Joan, maybe this is more out of your shop. I'm wondering if you guys have ever done a spatial analysis of how much the industrial manufacturing space is available per county that's vacant compared to where the numbers of firms and the jobs are, to see whether that concentration in Burlington and Chittenden County is primarily because we have invested so much in additional building capacity. You know, commiserate with the fact that there's additional firms here. So I'm just wondering if we were to be thinking about how to spatially spread out manufacturing more across the whole state, is there a facilities deficit for that manufacturing to take place in or not?
Okay, that's a good question, and I'll be calling Frank on that.
We have a lot of that information. The Agency of Commerce asked all the RDCs to put it together about a year ago, and we update ours annually, but it's pretty good information.
Do you have any sense of?
Well, there isn't, even in Chittenden County, the vacancy is very tiny. And the industrial base is huge too, it's millions of square feet. But the vacancy is very, very low. So there isn't as much excess capacity of existing industrial square footage as we might think there is. And the same in the rest of the Northwest labor market, the same as in St. Albans and Swampton as well. Around the state, there's a little bit more capacity. I don't know, Rutland, you know, when you look at these numbers, you definitely have, you've got IBM and GE that are driving a lot of this because they really take care of their employees really well on the wage side.
I'm not sure how strong the correlation would be, because there's a lot of vacant space in some parts of the state, but some of the space is just tough. It's brownfield, it's old, and then there's been some vacancies that have recently become available. It's an interesting point in terms of the investment piece in infrastructure.
Great point. We know it really well because we're on it. So.
Any other questions about the wage? I wanted to end with a request, and that is that our shop, Labor Market Information, and the Agency of Commerce and Community Development, we are collaborating together, trying to look at the economic impact of technology on the Vermont economy, looking at the overall impact of technology on the Vermont economy. It's a complicated question, as you might imagine, and we know a lot about economics, but we don't know much about technology. One of the hardest things for us to do is define exactly what we mean when we say technology, for instance. That's where we are now, still trying to get our brains around what exactly we define as technology. We would love support and help from people in doing this. And if you want to dive right in and get into the analysis with us, that would be fantastic. But as important, if there are people, we are going to have several people in our office this summer working on this. And what they would like to do is find opportunities to interview people who work in a sector that, once we have a definition, seems to fall under tech, and learn a little more about what you do, what your processes are, that sort of stuff. So we invite everyone to please, if you have a few minutes, to take some time to talk to our people. Yeah.
Yeah, question, Dan DiBattista from GE Aviation. I was surprised not to see aerospace as its own category. So where did it fall?
Oh, that's a great question, Dan,
Because
especially in this
they
state.
tend to be, when it comes to manufacturing, probably the higher paying jobs, so just, I don't see it in there.
By the time the panel gets 30 seconds in, I'll have an answer for you. Where's aerospace? My guess is that NAICS doesn't break it out at a 3-digit level, so it just gets collapsed into
Yeah.
something else, but
I
we
was
can
just
try to figure out
curious.
what it is.
Yeah, thank you.
Yep. Okay. Anyway, yes,
I
Joe.
just have another question. It would be interesting to see the concentrations within each of those sectors, like in food manufacturing, if it's including a beverage company, how much sway that concentration has on the entire portfolio. So if we're saying that growth has been 1,500 jobs in that sector,
In food
how
manufacturing.
much did that represent, how much did one company represent that growth? So we have an understanding of the distribution.
We can't provide data on one company, so we would have to look at, we can look at how many firms are in that, but we can't provide, for confidentiality purposes, we can't provide data on
Right,
one.
you may not have to divulge the name of the company necessarily, but just so that we understand the dependency on one firm versus several.
To the extent that we can publish that, we're happy to do it, yeah.
Number of
We are
firms.
pretty limited, yeah, we can tell you the number of firms, in most cases. But yeah, we'll look into it. Other questions people have?
What,
Yes, sir.
transportation, survey, what might be interesting to track is companies that didn't come to Vermont and why. You see the New York ads, 10-year, no sales tax, no business tax, no property tax, of companies that the state has been courting that we lose, why are we losing?
Right. It's certainly an important question. It's not our office, but it's certainly a valid question that needs to be asked. Pat?
Pat Moulton, Commerce Grant. I can tell you, I read with delight the article last week in the New York Times about the millions New York has been spending on recruiting businesses now, few jobs it's actually created. So there's some lot of fine print you got to read there. So.
Okay.
Yeah.
Great, there's plenty of room for questions as the panel gets going. Why don't we take just a 5 or 6 minute break? If people can keep it that short.